The Canadian dollar is on the downward trajectory. In fact, it's actually at an all-time low in the past 8 years. In fact, it could get even worse considering the tariffs are actually maybe potentially going to hit. We'll see if those get pulled back. But even before these threats, we've had a really bad economy that's led to the dollar just tanking because our GDP is really collapsing in on itself. You know, you think about the industries that make Canada the most money, and it would be like the natural resources, water, lumber, including gas. And now we don't use that as much. We don't actually export a lot of that stuff. So it's really affecting the GDP, which also affects the currency. On top of that, you have a massive real estate bubble that looks like it might pop any moment. So it's leading people to want to ditch the Canadian dollar and ditch actually investing in the economy, which is not a good sign for a G7 nation. Let's check out some videos regarding this topic today.
The Canadian dollar has weakened to levels not seen since the 1990s. You'll see in the graph above that the Canadian dollar recovered pretty quickly in the late 90s. This time we're back at those levels, but things are different, and I think the dollar is going to continue to depreciate, and I want to share my thoughts on why. Oil prices are expected to remain low in 2025. Canadian dollar is largely driven by commodity prices, oil being a big one. With lower demand for oil, there's going to be lower demand for the Canadian dollar. Second, the Fed in the US yesterday cut rates, however, signaled that there's going to be less rate cuts than expected in 2025. With the US having higher rates and Canada having lower rates, that differential will also drive the Canadian dollar lower. Pardon my French, but Canada's in a bit of a shit show right now. And you don't have to be living in Canada to see this with what's happening with the government. A country's currency represents one's view in the stability of a country, one's view of the economic growth and potential of a country. And given what's happening right now, it feels like things are going to get worse before they get better. And that's another driver of the Canadian dollar going lower. Lastly, tariffs. That's all I got to say. Tariffs. If you're Canadian, I have another video I posted on what you can and should do about it. If you're American, Canada is kind of on sale right now. We're a beautiful country up north, so come on by, you won't regret it. Now is the time to visit the country.
Yeah, so one thing that's really interesting that he stated is that like Canada is like for sale, right? It's on sale right now. And I do notice that. I do have an eBay store where I sell some collectibles online, and I'm getting more buyers in the United States than I am in Canada, and like a substantial amount. I'm talking like 80% of my sales are to the United States because of the weak currency, right? If you're looking at exchange rate, you're spending like $1 on something that would be $1.40 in Canada, but people in Canada don't want to spend $1.40 because they have that price memory where they think it should be closer to like the price of what it is in the States. But unfortunately, with like, you know, the currency exchange, it's actually a lot worse. And we have more videos talking about that.
Hey guys, Jim in Toronto. What will happen if the Canadian dollar goes back into the 60s relative to the US dollar? As an investor that has a source of US dollars, every foreigner is going to be looking at purchasing Canadian assets on the cheap. From the perspective of an investor with US dollars, Canadian listed prices would be 40 to 50% off. For assets that are critical to the country, such as airlines or perhaps oil, the government may step in to set foreign buying restrictions. That would also apply to anything that the Canadian government deems a threat to national security. But all other Canadian assets would be up for grabs. This shows the importance of getting US dollars as soon as we hit parity, which will happen again sometime in the future. Good luck.
Yeah, and you have to also remember that the US, it always seems to bounce back. That's why he's also saying it's a good time to maybe buy US dollars. I wouldn't say now though, right? Once it gets closer to a more natural level that we've seen in the last decade or so, then maybe it would be a time. But I don't even know if that's great advice, to be honest. I just think right now the Canadian currency is on like free fall because of a lot of economic factors, the fact that there's tariffs as well coming in, and the stability of the country. I mean, technically right now we don't really have a government, and even with these impending tariff threats, they decided to prorogue parliament, and basically government is going to be away until like March. Like real duties won't be enacted for a while now, so we are literally kind of a banana republic, and a lot of countries are seeing that, and they're definitely taking a currency hit as well because of that.
The Canadian dollar is now at its lowest point since peak pandemic. Before that, the last time it fell below 72 cents US was almost a decade ago. And everyone we spoke to expects it's still got further to fall.
We are kind of expecting to move to like 69 cents in the next 3 to 6 months.
We're there now.
Now look, maybe you're thinking, I have no plans to travel to the US. Why do I care? But even if you never leave your neighborhood, the exchange rate absolutely affects you. So let's go through how, starting with how the dollar fell so low in the first place. Generally, there are two big selling features that make investors want to put their money into one country over another. One is if they believe that country's economic outlook is trending in the right direction.
One of the stark divergences we see in Canada versus the US is, number one, the economies are moving in two different ways.
For example, the unemployment rate in the US is about 4%. In Canada, it's been creeping up. Now it's 6.5%.
I think it's closer to
GDP
7%
growth
now.
last quarter was close to 3% in the US. In Canada, it was around 1%. And the debt to income ratio in the United States, that's how much of your gross monthly income goes to paying debt, is around 100%. In Canada, it's 180%. Yes, that means more debt than income. You get the point. Economies unequal. But the other big reason investors might want to put money into a particular country is when it's got high interest rates.
If like an international investor has money to invest in either Canada or US, all else equal, they'll gravitate to where the interest is higher because they earn more.
And so that's unquestionably at this point in the United States.
Canada has been cutting rates over and over again since the summer, trying to kickstart a stalling economy. Meanwhile, in the US, with a much stronger economy, their rates haven't moved as much.
That's also a very, very interesting point. And talking about interest rates in general, when you're investing in a country, or if you have a bank account that has it's a high interest saving account, or if it is just like a GIC here in Canada, you gain interest on your money. And when, the Bank of Canada lowers interest rates, you're getting less money back as an investment. So people decide to invest in other places like the stock market or other currencies like the US right now, which has higher interest rates right now, so a better return for investors who want to park their money there, and also just more stable in general, which is crazy to say that Canada is a less stable country right now than the United States.
The recent depreciation we've seen in the Canadian dollar has been more driven, in our view, by trade uncertainty, and particularly President Trump's threats to impose 25% tariffs on Canadian exports. This is a more material move in the Canadian dollar. If you go back to October, Canadian dollar was 73, 74 cents. It's now sort of 69 to 70. Depreciation makes our exports more competitive. Of course, the threats of tariffs will make them much less competitive, but it also has some other impacts. It means that the cost of things we import, it will be higher. And you will start to see that relatively quickly on things like fresh fruit and vegetables, which obviously it's winter in Canada. We import a lot of those from the United States. That'll get passed through pretty quickly. The other implication of a weaker Canadian dollar is that any intermediate inputs, so for example, machinery and equipment, investments Canadian companies make, buy equipment from the United States, that becomes more expensive. That will hurt our investment.
Yeah, no doubt it will hurt the investment, but again, tariffs is what he's Tiff Macklem, this is the head of Bank of Canada, and I do agree, but I don't think it's just tariffs. Again, there's so many factors. A lot of people will point at one thing more over another because they want it to be, it's more of a political leaning where they'll say that, oh, it's because of the tariffs, that's the only reason why the Canadian dollar is weak. But it's also other economic factors as well. It's also the stability of the country. You don't really have a real government right now, which is kind of crazy to say that there isn't really a government. In fact, instead of calling an election, they're deciding to just kind of stop Parliament for a bit until they can get a leader to actually run an election cycle, which, seems fair, but at the same time, when you have impending tariffs from the US, it doesn't really look great, and it makes your country kind of look like a banana republic.
I can't believe how rich I am in Canada. The Canadian dollar to US dollar is benefiting me a lot right now. I feel so loaded. I feel like dollar bills. Do you need a coffee? Do you need dinner? Do you need a lift? I'm like, Oprah, I can get anything you need because it is all so cheap for me. I just can't believe how rich I am in Canada. I love it.
Yeah, it must feel really good going on vacation when the currency exchange is very much in your favor from the United States perspective. I remember going to the United States after the financial crisis, and it was actually really good. As a Canadian, like the currency was almost on parity, and things are generally cheaper in the United States for the most part. Maybe not so much now, but during that time, I remember going out pretty much every night, having nice dinners in New York City, which is where my sister lived at the time, and it was fantastic. It felt like incredible. You'd go to a place and they'd have the suggested price for Canada and US, but you're going with the US price, even though the Canadian dollar is doing a lot better. Things like comic books, that was something that was interesting. I didn't buy too much comic books, but regardless, I'm kind of going on a rant where I don't really need to go on a rant. All I'm saying is that it's going to be pretty good if you have a crazy difference in your currency exchange when you go to another country and visit. You're going to live, you know, a great life there. Well, not really live a great life unless you're just planning on moving there in general. But if you're going on vacation to places like the United States, if you're Canadian, you're going to really feel it. Your wallet's going to feel it. But if you're going to places like South America, Costa Rica, maybe even Mexico, it won't be as bad. You actually probably have a pretty good experience based on the exchange rates. But again, this is just a really interesting topic, and I think it's one that needs to be addressed here on the channel, and I want your guys' thoughts and opinions about it down below in the comment section. With that being said, guys, I'll see you in the next video. Take care.